Welcome to Money Minds. Is Berkshire Hathaway stock a buy, sell, or hold? Now there's a question that's been on the minds of many financial enthusiasts. Berkshire Hathaway, a renowned conglomerate, has been a stellar performer since the 80s, with its shares skyrocketing over 2,000-fold. Its growth is a testament to the strategic prowess of its led by the legendary Warren. But as we know, past performance isn't always indicative of future success. So the question remains. In this video, we'll delve into the performance, leadership, and portfolio of Berkshire Hathaway to answer that question. Berkshire Hathaway has been a highly profitable investment since 1980. This is no overstatement. The company's shares have surged, rising over 2,000-fold in the past 4 decades, a feat that is nothing short of remarkable. Imagine buying a house for $100,000 in 1980, and today that same house is worth $200 million. That's the kind of growth we're talking about here. And it's not just about the past. Even today, with a market capitalization of $900 billion, Berkshire Hathaway continues to outpace the S&P 500, a benchmark index that includes 500 of the largest companies in the United States. This means that Berkshire Hathaway is not just surviving in the competitive world of business, it's thriving, consistently outperforming a broad range of other top-tier companies. But let's also address the elephant in the room. The company's growth has slowed in recent years, yet it's crucial to understand that this slowdown does not equate to a stop. Berkshire Hathaway's growth remains steady, and the company continues to be a profitable venture for its investors. It's like a marathon runner who, after sprinting the first half of the race, has now settled into a consistent, sustainable pace. The runner might not be as flashy or as fast as before, but they're still moving forward, still progressing. This brings us to a key question. What's the secret sauce? How does Berkshire Hathaway continue to perform so well, even in the face of changing market conditions and increased competition? The answer is not as simple as one might think. It's not just about the investments they make or the businesses they acquire. It's about the leadership, the strategy, the long-term vision. Berkshire Hathaway's performance has been exceptional, but what drives this success? To truly understand the company's performance, we need to delve deeper into the workings of Berkshire Hathaway and explore the factors that contribute to its enduring success. That's what we'll be doing in the next section, so stay tuned. At the helm of Berkshire Hathaway is the legendary investor, Warren Buffett. Known for his down-to-earth style and sage advice, Buffett has guided the company with a steady hand for over 6 decades. His investment style, often dubbed value investing, emphasizes long-term growth over quick profits. Buffett's mantra of buying good companies at fair prices has been a cornerstone of Berkshire Hathaway's strategy, contributing significantly to its success. Buffett's leadership, however, doesn't stand alone. He is supported by a team of skilled investors, each bringing their unique insights and expertise to the table. Among them are Charlie Munger, Buffett's longtime business partner, and the newer additions to the team, Todd Combs and Ted Weschler. Each has played a part in shaping the company's investment strategy. Charlie Munger, Berkshire Hathaway's vice chairman, is known for his philosophy of sit-on-your-ass investing. This approach, which encourages patience and a long-term perspective, aligns perfectly with Buffett's own, and has been instrumental in steering the company towards profitable ventures. On the other hand, Todd Combs and Ted Weschler, the newer faces in the team, bring a fresh perspective. They've been tasked with managing a portion of Berkshire's massive portfolio, and have made significant contributions to its continued growth. Their influence has been seen in more recent investments in tech companies, a sector traditionally not favored by Buffett. The harmony among the team is evident. Their shared vision, combined with their individual strengths, has enabled Berkshire Hathaway to navigate through market volatility and maintain a strong performance. The team's collective wisdom and experience have been pivotal in making strategic investment decisions that have yielded substantial returns. Strong leadership is a key factor in Berkshire Hathaway's success. But what about its portfolio? Berkshire Hathaway's long-term success is attributed to its well-diversified portfolio. Indeed, the portfolio of Berkshire Hathaway is a patchwork of intriguing assets, a mix of both publicly traded companies and privately held entities. This diversity is a testament to the company's unique investment style, one that has been shaped and honed under the guidance of Warren Buffett over many decades. Publicly traded assets are those that are listed on a stock exchange. These assets are transparent. Their performance and financials are open for all to scrutinize. Berkshire Hathaway has stakes in a variety of such businesses, from tech giants like Apple to financial institutions such as Bank of America. On the flip side, privately held assets are the ones that aren't traded on a public exchange. These are the businesses Berkshire Hathaway fully owns, and they span across a wide range of sectors, from utilities and energy to insurance and manufacturing. These businesses provide a steady stream of earnings, further fortifying Berkshire's financial muscle. Now, this mix of assets, while a strength, also presents a challenge. Valuing Berkshire Hathaway is not as straightforward as valuing a typical company. It's like trying to put a price on a basket full of different fruits, each with its unique taste and nutritional value. The publicly traded assets, they're easier to value as their prices are readily available in the market. But the privately held assets, they're a different story. Their worth is not as easily discernible. It requires a deep dive into their financials, an understanding of their respective industries, and an evaluation of their competitive standing. So you see, the task of valuing Berkshire Hathaway requires a fair bit of nuance, understanding, and analysis. It's not a one-size-fits-all approach, but it's this very complexity and diversity that make Berkshire Hathaway a fascinating investment proposition. The diversified portfolio of Berkshire Hathaway is a significant factor in its steady performance. But is the stock fairly priced? Currently, Berkshire Hathaway stock is trading at a price-to-book ratio of 1.6. Now, this might just seem like a random number, but in the world of finance, it holds a lot of weight. The price-to-book ratio, often abbreviated as PB ratio, is used to compare a company's market value, that is the price at which its stock is trading, to its book value, which is essentially the company's total assets minus its liabilities. When we say that Berkshire Hathaway's PB ratio is 1.6, we're indicating that the market values the company 60% higher than its book value. This may lead you to wonder, is the stock overvalued? The general rule of thumb is that a PB ratio under 3 is considered good, and anything under 1 is considered excellent. So, a PB ratio of 1.6 is seen as fair value, not too high, not too low. But the PB ratio isn't the only thing to consider when valuing a stock. We must also look at the fundamentals of the company. In the case of Berkshire Hathaway, the fundamentals are strong. It's a highly profitable company that has consistently outperformed the S&P 500. It has a diversified portfolio of both publicly traded and privately held assets, which reduces risk and increases potential for growth. Its market cap is an impressive $900 billion. What's more, the company is led by none other than the legendary investor, Warren Buffett. His keen eye for value, diligent investment philosophy, and steadfast commitment to his shareholders have been key drivers of Berkshire Hathaway's long-term success. In conclusion, the valuation of Berkshire Hathaway stock is not just about numbers. It's about the company's strong fundamentals, its leadership, and its proven track record of success. Berkshire Hathaway stock, with its strong fundamentals and leadership, remains a solid investment choice. So, is Berkshire Hathaway stock a buy, sell, or hold? Let's revisit the key points we've discussed. Berkshire Hathaway has proven its mettle over time, with shares rising over 2,000-fold since 1980. It continues to outshine the S&P 500, which is no small feat, considering its massive market cap of $900 billion. The company's leadership, headed by none other than the legendary Warren Buffett, has been instrumental in its long-term success. The team's strategic approach and clear vision have guided Berkshire Hathaway to where it stands today. Now, let's not forget about Berkshire's diversified portfolio. It's not just a mix of publicly traded and privately held assets, but a well-curated collection of investments that have proven their worth over time. This diversification is a key strength, providing a buffer against market volatility and ensuring steady growth. Valuing Berkshire Hathaway stock is no easy task due to its intricate blend of assets. However, currently the stock is trading at a price-to-book ratio of 1.6, indicating fair value. So, where does this leave us? Berkshire Hathaway's solid fundamentals, strong leadership, and diversified portfolio, coupled with its fair valuation, make it a compelling consideration. However, as with any investment, it's crucial to ensure it aligns with your individual financial goals and risk tolerance. Given these factors, you can now make an informed decision about Berkshire Hathaway stock. Remember, every investment decision should align with your individual financial goals and risk tolerance. Alright folks, that's it for our deep dive into Berkshire Hathaway stock. We hope this analysis has provided you with valuable insights that will help you make informed investment decisions. Your support means the world to us. If you found this video helpful and want to stay updated with more insightful content like this, please consider subscribing to our channel and hitting the bell icon for notifications. Your engagement helps us grow and continue to provide high-quality financial content. Remember, the world of finance is vast and ever-changing, and we're here to help you navigate it. Don't forget to subscribe and hit the bell icon for notifications. We can't wait to see you in the next video.